So we were in the recurring documents. Just now, in the previous class, we have seen up to change recurring documents. Now, delete the recurring document. Right down here. To delete the recurring document, we have to select. The deletion indicator. We have to select the deletion indicator in the original recurring document. Procedure. Go to the transaction code. OBD2. Go to the transaction code OBD2. Within brackets, edit recurring documents. Sorry, not OBD2, FBD2. Change the recurring documents. Document number is equal to 2,01,000. Company code SSKH. Fiscal year 2022. Go to menu view. Recurring entry data. Select deletion indicator. And regarding the recurring documents, we can see the other details also here. First run, last run, next run, and number of interval in months, right? Run date first. And till now, we have executed 3 runs. So all this data we can see here. And interval in months. Here, if you want to change the interval in months in between, right? We can edit that interval in months in this screen. Say, for example, we have taken one term loan for 10 years, right? So initially, the bankers have asked us to pay installment every month, right? So we have been very much regular in paying our installments for 3 years. So from 4th year onwards, right, the bankers have given us the permission to pay installment every quarter instead of every month, right? In that case, we have 2 options. We can delete the original recurring document, which we have created with the interval 1 month. Then we create another recurring document with the interval 3 months. Otherwise, we can change the interval here. So if you want to delete the deletion indicator, right, we have to select, if you want to delete the recurring document, we have to select this deletion indicator. Right now, click on save. Now you can delete the recurring document. Transaction code F.56. Company code is equal to SSKH. Document number 2,01,000. Fiscal year 2022. select a test run, click on execute, observe the document, click on back arrow, deselect test run, click on execute. See, update. Do you really want to delete? Yes, click yes on the mistake. Now you cannot display the recurrent document now because it was deleted. F.15. You can display recurrent document in F.15. See, no list is generated. Now, here, interval in months, minimum 1 month, right? But sometimes some documents are to be posted every week, or you can say on Friday of every week. Some documents are to be posted on Friday of every week. Otherwise, some documents are posted on 1st, 5th, 10th, 15th of every month. Right? In that case, how we can use this recurrent document functionality, right? So in order to post, right, the documents on uneven dates also, we can use this recurrent document functionality. Go back to notes, please. Put heading note. Put heading note. We can use the recurrent document functionality to post the documents, on uneven dates also, full stop. For that, we can define the run schedule. With all the required dates. We can define one run schedule with all the required dates and assign them. And we assign run schedule. In the recurring document. Steps. Sorry, before the steps, business example. A business transaction is to be posted. On 1st, 5th, 10th of every month. Full stop. So we can define one run schedule. With the above dates. Okay, my voice is breaking. No? Business example. A business transaction is to be posted. How is my voice now? Still it's breaking, Srilekha? For others, my voice is breaking or it's clear?
It's clear, sir.
No, sir, it's clear now.
Okay.
Clear, sir.
Okay. Business example. A business transaction is to be posted on 1st, 5th, and 10th of every month. Just I'm giving you an example. On 10th of every month. In that case, we can define the run schedule. Steps. Define run schedule. Define run schedule. Path. SPRO. Path. SPRO. Financial accounting global settings. Document. Document. Recurring entries. Define run schedules. Define run schedules. Transaction code OBC1. Transaction code OBC1. Click on new entries. Click on new entries. Run schedule is equal to SSKH. Give some name or number. Description. Posting on 1st, 5th, and 10th of every month. And 10th of every month. Concept. Table name T054. Table name T054. So run schedules are stored in the table T054. Step number 2. Enter run dates. Enter run dates. Transaction code OBC2. Transaction code OBC2. Path is same as above. Path is same as above. Run schedule is equal to SSKH. Run schedule is equal to SSKH. Click on enter. Click on enter. Click on new entries. Click on new entries. Run date is equal to. Enter all the run dates. Run date is equal to. Enter all the run dates. Means how many number of dates or how many number of months you want to enter. All the dates you're compulsory you have to enter. Like what? 1/4/2022. Then 5/4/2022. Then 10/4/2022. Then 1/5/2022. Then 5/5/2022. Then 10/5/2022. Then 1/6/2022. 1st June 2022. Like that, you have to enter all the dates compulsory. Click on save. Header. Click on save. Table name T054A. T054A. So here we assign this run schedule while creating the recurrent document. While creating the recurrent document, run schedule. Right? So this is how we can use this recurrent document functionality to post the documents on uneven dates also. Here I have followed on logic, 1st, 5th, 10th, right? Otherwise, a document is to be posted on 1st, 3rd, 5th, 15th, 25th of every month. So the dates can be anything. They can be random dates also. But normally we use these recurrent documents, right? To post the documents which occur fixedly in fixed intervals. Then, foreign currency postings. What is this foreign currency postings? Here, the financial statements of the company code are to be prepared in the company code local currency. Suppose your company code is in India. So we have to prepare the financial statements in Indian rupees, obviously. And your company code is in USA. We have to prepare the financial statements in US dollar. And your company code is in UK. We have to prepare the financial statements in GB because we create the company codes with respect to currencies only. So the financial statements are always to be prepared in the company code local currency. But it is quite natural that it is quite common that every company code incurs the business transactions in foreign currencies. For example, you have sent some of your employees on deputation on project for some other countries. So in order to meet their expenses, right, for these specific employees, you pay the salaries in the respective foreign currencies. You are exporting the goods, means you post the sales invoices in foreign currencies. You receive the payments from the foreign customers in the foreign currencies. So you have to post the receipts in foreign currencies. Similarly, you are importing the goods. Purchase invoices are posted in foreign currencies. You make the payments to vendors in foreign currencies. Foreign vendors in foreign currencies. You post the payments in foreign currencies. Like that, and sometimes your landlord is in USA. So you make the payment to your landlord, rent payment to your landlord in US dollar. Like that, you have during the management of the business, every day, you may be incurring the business transactions in those foreign currencies. Then these business transactions are entered into the accounting books in foreign currencies only. But we prepare the financial statements in the company called local currency, right? That's why whenever we enter the foreign currency business transaction in the books of accounts, it has to be converted by the system into company code local currency value. So how the system will convert? For that, we are going to configure the system. But it is quite common that every company code incurs the business transactions in the foreign currencies also. In that case, the amount of the foreign currency business transactions have to be converted into company code local currency. So we configure the system to convert the foreign currency business transactions into company code local currency at any of the following exchange rate types. For example, our company code local currency is INR. So we are including the business transactions in US dollar, GBP, and Singapore dollars. So let us talk about one foreign currency, US dollar. So when you post a business transaction in the US dollar, the system can convert that foreign currency into company called local currency INR, either at the bank buying rate or at the bank selling rate or at the bank average rate of US dollar. See, when you incur the business transaction in the US dollar, that is posted in US dollar only. Then the system can convert that US dollar value into company called local currency, right? Either at the bank buying rate of dollar or either the bank selling rate of dollar or either the bank average rate of dollar. No. Company code is created in India only. Okay, so what is bank buying rate? What is bank selling rate? What is bank average rate? See, these buying rate, selling rate, average rate, these are called exchange rate types. For every foreign currency, right, we have these three exchange rate types. Bank buying rate means it is the rate at which the bank will purchase any foreign currency. For example, we have exported some goods to foreign customer, USA, right? So he has done the payment in US dollar only. And we cannot use the US dollars in the Indian market. And also, we don't have any dollar account with the bank. That's why we convert those dollars into Indian rupees. We have to convert those dollars into Indian rupees. For that purpose, we approach the bankers. Please remember, as far as any financial transactions are concerned, bankers are very much trusted, right? So the bankers are considered as most reliable sources for the financial transactions. So we approach the bankers, and the bankers will purchase the dollar from us at a specific rate. That rate is called bank buying rate. And that is represented with the letter G in the system. Then bank selling rate. Bank selling rate means it is the rate at which the bank will sell any foreign currency. For example, we have purchased on plant and machinery from USA supplier. So you have to make the payment to USA supplier in US dollar. So we don't have any dollar reserves. So we have to purchase the dollar again. So we approach the bankers. And the bankers will sell the dollar at a specific rate. That is called bank selling rate. Right? Of course, you can approach the private foreign exchange dealers also, but we approach the bankers normally as a business people. Then bank average rate. It is the average of bank buying rate and bank selling rate. And this bank selling rate is represented with the B letter, and bank average rate is represented with the M letter. So this bank buying rate, bank selling rate, and average rate, they are called exchange rate type. According to client requirement, we can enable the system to convert the foreign currency transaction either at the bank buying rate or bank selling rate or bank average rate. So these are called exchange rate types. And these exchange rate types were already defined in the system. We can use these exchange rate types, or we can create our own exchange rate types also. We can define our own exchange rate types also. Now let us see how to configure for conversion of foreign currency transactions. To verify the foreign exchange rate types, first we have to verify whether these exchange rate types GBM are available in the system or not. SPRO, SAP NetWeaver, general settings, currencies. Here we can define our own countries here. I told you, we can define our own countries and currencies, right? So if you want to define your own countries, in this part, you can define your own countries. Currencies, general settings, currencies, right? Then check exchange rate types. See the material whatever item. No action required, just to verify whether following exchange rate types are available or not. So click on position. No, I will tell you how the system updates, okay? I will cover that topic. We have not come to that point of time. The exchange rate type is equal to G, bank buying rate. Click on enter. See, G, standard translation at bank buying rate. Then click on position. The exchange rate type is equal to GB. Exchange rate type is equal to B. Click on enter. See, standard translation at bank selling rate. Then click on position. The exchange rate type M. Click on enter. See, M is also already available there. Standard translation at average rate. So you need not define anything. In case I don't want to use the system defined exchange rate types, I want to define my own exchange rate types, right? In that case, click on new entries. X, bank buying rate. Right? Then Y, bank selling rate. You need not write. I'm just showing you, if you want to define your own exchange rate types, how to define. Z, bank average rate. As simple as that. Click on save. So here I don't want to use XYZ. I want to use system defined exchange rate types only. Right? Write down table name. The exchange rate types are stored in the table TCURV. The exchange rate types are stored in the table TCURV. TCURV. Next, define translation ratios for currency translation. Define translation ratios for currency translation. So what is the translation ratio? It is the relation between minimum units of two currencies in the commercial usage for the conversion purpose. It is the relation between minimum units of two currencies in the commercial usage for the conversion purpose. For any pair of currency, the translation ratio is always 1:1. But for the Japanese yen, the translation ratio is always 1:100. Means for example, right, INR is to US dollar is equal to 1:1. Then INR is to AUD is equal to 1:1. Then INR is to Singapore dollar is equal to 1:1. Means what? This is called translation ratio. What does it mean? Here, INR is to US dollar is equal to 1:1 means singular unit of US dollar should be converted into singular units of INR. $1 has to be converted into singular units of Indian rupees. That means per dollar, how many rupees you get. That is called conversion ratio or translation ratio. INR is to AUD is equal to 1:1. 1 Australian dollar is to be converted into singular units of Indian rupees. INR is to SGD. 1 unit of Singapore dollar is to be converted into singular units of Indian rupees. So this is called translation ratio. International wise also, right? This ratio remains same for any pair of currencies. It is always 1:1, but only one exception is there, right? JPY, Japanese currency, is 1:100. Why so? Right? We don't know reason actually, but what I think is in Japan, right, inflation is very high. Even though Japan is one of the richest countries, inflation is very high. So in the case of inflation, what does it mean? Money does not have the value, right? So that's why in the case of Japanese yen, 100 yens is to be converted into, means 100 yens is taken as one unit for the purpose of conversion into single units of Indian rupees, right? If anybody wants, they can write it down. Against the step, you can write it down. This is only the exception. Now, path is same as above. I hope everybody has written. Path is same as above. Define translation ratios for currency translation. Click yes on the message. Click on new entries. Exchange rate type is equal to G. From is equal to US dollar. So from currency US dollar to INR, our company code local currency. Valid from today's date, 11/1/2022, 23, sorry. Valid from 11/1/2023. Ratio from 1, ratio to 1. ratio from 1, ratio to 1. Then exchange rate F is equal to B. From is equal to US dollar to INR. So foreign currency US dollar is to be converted into Indian rupees. Our company called local currency. Valid from 11/1/2022. Sorry, 23. I'm sorry. Valid from 11/1/2023. From ratio 1 to ratio 1. The exchange rate type is equal to B. No, M. The exchange rate type is equal to M. From is equal to USD to INR. Valid from 11/1/2023. Ratio from 1, ratio to 1. The concept. Write down the table name. TCURF. Table name TCURF. So these translation ratios are stored in this table. TCURF. Now, write down one more point there. We have to define the translation ratios for every combination of, we have to define the translation ratios for every combination of foreign currency and the company called local currency. Foreign currency and the company called local currency for every exchange rate type. For every exchange rate type. Say, for example, we are also incurring the business transactions in the GB, right? In that case, we have to define the translation ratio for the pair of GBP and company called local currency for every exchange rate type. See, the exchange rate type G from currency GBP to INR, valid from 11/1/2023, from ratio 1 to ratio 1. Exchange rate type B from currency GBP to INR, valid from 11/1/2023, from ratio 1 to ratio 1. Exchange rate type M from currency GBP to INR, valid from 11/1/2023, from ratio 1 to ratio 1. Like that, if you are every day you are incurring the business transactions 10 currencies, then 10 into 3, 30 lines are to be defined here, right? You can go on defining any number of relationships. Write down one more point. The translation, sorry, the exchange rate types, the translation ratios, and the exchange rates are stored at the client level. So all the company codes, created in that client number, can use the same. What does it mean? What is its implication? Right? Say, for example, GBM with reference to US dollar INR was defined with validity from today's date, right? So they are defined at a client level. Client level means, right, at the time of logging into the server, right, we are entering the client number, right? So these translation ratios are used by all the company codes created in this client. Means all your company codes also you have created in this client only, right? So you can use the same action, you can use the same translation ratios. That is the meaning of it. So why I'm saying like this? Because here we have defined the translation ratios now, right? So we have defined the translation ratios now. See, in our class, I have defined the translation ratios now, right? Then after the class, you have started doing the practice in the same server for foreign currency translation. Then you enter the valid from today's date, right? Then you get the error message, like an entry already exists with the same key. So here, if you get this error, an entry already exists the same key, just ignore that step, go for the next step. Suppose tomorrow you are doing the practice, right? Then before you, another student has done the practice, right, for his Indian company. Again, if you are doing the practice for Indian company code, you will also get the same message, error message. So if you get the error message, an entry already exists the same key, leave the step and go for next step. Because this is the client level setting. That is the reason. Chaman, what's your question? I did not understand.
The same rule is applicable for the country also, as we define for the translation ratio currency at the client level.
Yeah. Countries also defined at the client level.
Okay.
Now,
Hello, sir.
yes.
Currently, we are having exchange rate of USD is 1 rupee is equal to 0.012 USD. This is how we have to assign over there, or 1:1.
No, not like that, right? Always we define the translation ratio, okay? But if you want to enter like 1 rupee is equal to point something something dollar, right?
Okay.
That you can enter at the time of entering the exchange rates. This is called indirect quotation, right?
Okay.
What is that indirect quotation? I'm going to explain you now only.
Okay.
I'm going to explain you now only. Okay?
Okay.
Yeah. Enter exchange rates. So first let us enter the exchange rates manually. Then after that I will tell you how do we enter the exchange rates in the real time. So in our training class, we enter the exchange rates manually. Of course, even the real time also, right? We can enter the exchange rates manually every day. But there are some other methods also which we can use to enter the exchange rates. See, SPRO, I mean, path is same as above. Enter exchange rates. Click on new entries. The exchange rate type is equal to G, valid from 11/1/2023. From is equal to USD. First to take the setting, I will explain. Direct quotation 85 rupees. To INR. To INR. The exchange rate type is equal to B, valid from 11/1/2023. From is equal to USD. Direct quotation 87. Just like that, I'm entering whole amounts. To INR. Here we have to calculate average rate. No, that's why for the easiness of calculating average rate, I'm taking 85 and 87, nothing else. But you enter the actual rates only. Exchange rate is equal to M, bank average rate, valid from 11/1/2023. From is equal to USD. Direct quotation 86 to INR. Click on save. Table name. Click on save. Table name TCURR. So these exchange rates are stored in the table TCURR. Click on content. Now, again, these settings are also done at the client level. Means again after the class, you are trying to enter the exchange rates, right? Then the system will give the error message and it will already adjust the same thing because you give the date same, no? Right? That's the reason. Now, here we have entered direct quotation, right? So why did we enter the direct quotation? And also you have the facility to enter indirect quotation. Why can't we enter the indirect quotation? For that, we should know what is direct quotation and what is indirect quotation. See the notes. Foreign exchange quotations. There are two types of quotations which we can enter in the foreign currency tables. Number one, direct quotation. Per 1 unit of foreign currency, how many number of units of company code local currency? See, per 1 unit of foreign currency, how many number of units of company code local currency? So our company code local currency is INR. So foreign currency is US dollar. So for 1 unit of US dollar, how many number of units of company code local currency you get? For $1, we get 85 rupees, 87 rupees, 80 rupees, 90 rupees. That is called direct quotation, right? Then it is convenient to use the direct quotation when the foreign currency is bigger than company code local currency. Within brackets, again continue, within brackets. It is easy to use direct quotation. It is easy to use direct quotation when the from currency is bigger than foreign currency, sorry, two currency, as simple as that. When the from currency is bigger than two currency. So what is from currency? US dollar. Two currency, INR. So US dollar is bigger than INR. So we are using direct quotation, right? Now, indirect quotation. For 1 unit of company code local currency, how many number of units of foreign currency? In our example, our company code local currency INR. So for 1 rupee, how many number of dollars you get? 1/85, 1/86, 1/87. As somebody said in our class, it will be coming in the decimal values. It is convenient to use the indirect quotation when the company code local currency is bigger than foreign currency. Within brackets. Within brackets. When the two currency, within brackets, it is easy to use the indirect quotation. It is easy to use the indirect quotation when the two currency is bigger than from currency. Is bigger than from currency. So in our case, what happens? What happened? from currency is bigger than to currency, right? So I have used direct quotation. Remember, it is only a matter of convenience. It's not a rule. You can use a direct quotation or indirect quotation, right? But normally what we do, when the from currency is bigger, we use direct quotation. But when the to currency is bigger, we use indirect quotation, as simple as that. So in that case, where do we enter the indirect quotation? Here. Instead of here, we enter here. So what is indirect quotation? As per our example, 1 divided by 85. This value entered in this indirect quotation. Okay. This value 0.01174 up to 117 is enough, or even 0.011 is enough. That's it. And one more thing, this exchange rates, right, changes every day. Not every day, every minute they change due to the supply and demand factors of respective currencies. So we are not concerned with the mechanism of fluctuations in the foreign currency rates. Our aim is to enable the system to convert the foreign currency business transactions at the required exchange rate types. That's all. Now you have to understand one more concept: transaction currency. It is the currency in which the business transaction occurs. It is also called document currency. So for every foreign currency, document currency or transaction currency, both are same. For every foreign currency posting, the system stores two figures, one in the document currency and other in the company code local currency. After posting the transactions, I will explain you. I will show you both the currency amounts. Let us post one document in foreign currency, F-02. Document date is 11/2023. Type is equal to SCA. Company code SSKH. Posting date 11/1/2023. Period 10. Currency USD. Till now we have been using entering currency INR. Now currency USD, because this transaction was incurred in the US dollar. This is called transaction currency or document currency. So when I enter the US dollar here, how the system knows that it's a foreign currency? Because at the time of defining the company code, we have entered the currency INR, right? For our company code, we enter the currency INR. So this is called company code local currency. And here we have entered currency US dollar. So every time you enter the currency, no? So every time the system compares the currency entered in this field with the currency of the company code. If both the currencies are same, system understands that. If both the values are same, system understands that it's my own currency. If it is something else, and it understands that it's a foreign currency. So let us assume that we paid rent in US dollars. Other things are as usual. Posting key 40, debit for GL account. The account is Kogla 300, rent account. Click on enter. Look at the receipt. Against the amount, USD is there. So the amount is equal to 1000 USD. Business area SSKH. Text. Rent paid in US dollar. Posting key 50. Account is 2,100,000. Click on enter. The amount is asked is business area SSKH. Text plus. Click on display document overview. See, in the document overview also, the system will display the amount in US dollar. This is called document currency or transaction currency. The currency in which the business transaction is posted. Click on save. Now, go to menu document, click on display. Go to menu document. Click on display. See, administration rent account data to cash, $1,000, currency US dollar. Now, what is this amount in the company called local currency? Click on display currency. See, 86,000 INR. Administration rent account data to cash, 86,000 INR. So, sorry. Why so means 86,000 INR means the system has taken 86 rupees per dollar. Yeah, it is taking average rate, bank average rate. Why bank average rate? Why it has taken bank average rate only? Why did it not take bank selling rate or bank buying rate? See, important note I have given here. Whether a particular document should be posted at exchange rate type, GBM value is decided by its document type. SCA means GL document, KR, vendor invoice, DR, customer invoice. So we have to decide and assign the default exchange rate type to the document type in OBS 7. So what is the procedure to assign the default exchange rate type in the document type? Go to the transaction code OBS 7. Click on position. Document type SCA. Click on enter. Select the document type SCA. Click on details button. See, default values. For the document type SCA, default values, exchange rate type for foreign currency documents, M is there. That's why the system has taken 86 rupees average rate. But my requirement is, I want the system to convert the GL transactions with the selling rate, right? In that case, you can enter B here. You can come to this screen and you can enter you can assign the exchange rate type B. Then click on save. So from now onwards, if you post a foreign currency transaction, the system will convert it into company called local currency using bank selling rate. And the previously posted transactions are not affected. Now let us post one more document in foreign currency. F-02. Document date is 11/1/2023. Type is SCA. Company code SSKH. Posting date 11/1/2023. Period 10. Currency USD. This time I paid salaries. Posting key 40. The account is 4,100,000. Click on enter. The amount is $1,000. Business area SSKH. Text being salaries paid. Posting key 15. The account is 2,100,000. Click on enter. The amount is asked is business area SSKH. Text box. Now go to menu document display. Salary is open to cash. $1,000. Click on document currency. 87,000. That's how, according to client requirement, right? We can assign the required exchange rate type in the respective document types. Now, let us display the line items in the cash account. I hope everybody is following, right? So in the two foreign currency documents, cash account is created, right? So I'm displaying the line items in the cash account. FBL3M, sorry. FBL3M. Cash account 2,10,100. Account execute. See, today, right? 86,000. 86,000, 87,000. So document currency is different from account local currency. So the system is displaying the line items in the company code local currency. Why? See, while creating the GL account 2,100,000, right? Under the control data tab, you have selected balances in local currency only. So because of this selection, I gave you the notes also clear in the notes material. When you select this checkbox, the system will convert the foreign currency transactions into company code local currency, for which we require some settings. These settings you have done today. So because of this selection only, the system converts the foreign currency transactions into company code local currency. There are many more points to be explained. These points I will explain you tomorrow. Then we will go for next topic. Some of you have asked how to enter the exchange rates daily, right? Those methods I will show you in tomorrow's class. And if you have any questions for today, please ask them in tomorrow's class.